Home Depot is in trouble, and what they're seeing could mean trouble for the entire economy. Home Depot is huge. They are the third largest retailer in the country, just after Walmart and Costco. They're the largest home improvement retailer, and they're number 23 on the Fortune 500 list. In fact, they have over 2,000 stores in every corner of the country. And all of this means that they see a lot and they know a lot about what's going on in the economy throughout the country. It also means that when they speak, people listen, because they're often the first ones to see trends in the economy just as they're getting started. Now, the Home Depot is a publicly traded company, which means that they're required to file public financial statements with the SEC each quarter. And along with their public filing, they also opt to hold an earnings call as a way to talk about the results, answer analyst questions, and to drum up excitement for the company with investors. Well, they recently filed their financial statements for the third quarter, and they held an investor call, and what they revealed was shocking. Let's first start with their financial results. Their sales were up slightly from last year, but a lot of that was from the acquisitions that they made throughout the year. Their year-over-year sales growth was only 0.01%, which is tiny. Their foot traffic declined by 0.1% when compared to last year, and their operating income decreased by 1.2%. Now, none of that sounds like a lot, but it is significant enough that they've decided that they're actually going to reduce their full year profit forecast. They're now expecting a 5% decline in adjusted earnings per share, when previously they had only expected a 2% decline. The reasoning that they gave for that was really interesting, and I'm going to play a clip from the earnings call where they explain what happened.
Now I will comment on our outlook for fiscal 2025. Today we are updating our guidance to include softer than expected results in the third quarter, continued pressure in the fourth quarter from the lack of storm activity, ongoing consumer uncertainty and housing pressure.
So they gave three main reasons for the adjustment to their guidance: a lack of storm activity, ongoing customer uncertainty, and housing pressure. The first one is really interesting. This year has been a really quiet one for storms. In 2025 in the Atlantic, there were 12 named storms, 5 hurricanes and 4 major hurricanes, but the US mainland avoided any direct hits, which is the first time that that's happened in 10 years. That means that people didn't spend money on supplies for rebuilding, the kind of supplies that the Home Depot sells. Now, I find this interesting because while I recognize that a hurricane can result in a lot of spending at a place like Home Depot, I never really considered it a significant driver of revenue for them, but apparently it is. Next, they know ongoing customer uncertainty and housing pressure as reasons for their declining forecasts. And there's some really interesting points to discuss there. And we'll get to that in just a second, but before we talk about that, I want to tell you about this video's sponsor, Mando. Mando is the deodorant made for regular guys, but that doesn't mean that there's anything ordinary about it. It's super effective and lasts all day, and that's what I really like the most. I forget that I'm even wearing it because it blocks sweat and odors like a champ. They also have some great scents, things like bourbon leather, but it isn't too strong and won't clear a room like some other deodorants.
Went a little heavy on the pine tree perfume there, kid.
Another great thing is the variety of products that they have. They've got sticks and lotions and sprays and even wipes. It all works because the active ingredient prevents bacteria from even creating odors in the first place. But it's also gentle enough to be anything you need for anywhere you need it, even down below. So if you've been looking for a better deodorant, check out Mando using the link in the description or the QR code on the screen. And if you use my code at checkout, Dave5, you'll get $5 off the Mando starter pack for new customers. It's a great deal. So a big thanks to Mando for sponsoring the video, and again, be sure to check them out. Your pits and your bits will thank you. Now back to the video. So as I mentioned, the Home Depot noted that the major drivers for the reduction in their guidance for the year was a lack of storm activity, ongoing customers uncertainty, and housing pressures. One of the sections that I like most about the earnings calls that these companies do is when they give analysts an opportunity to ask questions directly to the company's leadership team. In fact, here is a really good question that was asked by one of the analysts about their expectations and how they had changed throughout the year.
You mentioned on this call and in the release that there was an expectation of increased or improving demand, I guess, through the remainder of the year at one point. Was that an expectation based on housing, or an expectation that there would be storms? And if there was any volatility related to government shutdown, do you have enough time looking backwards since the reopening that there's been an improvement in how the consumer is behaving.
Here is how the Home Depot's CEO responded.
Let me step back and just paint a broader picture of what we're seeing, with the consumer in our sector. Our comps definitely slowed as the quarter progressed. And as we said, the primary driver of that sales pressure was the lack of storm activity in the quarter. We don't plan per storms per se, but there's always some weather impact in the baseline. And given last year, pretty significant storm activity, and this year, truly zero. There was no storm activity this year.
So he brought up storms again, but then he went on to say this.
And then, you talked about, the overall economy and housing. We did expect to start seeing some pickup in demand in the second half of the year. We were expecting interest rates and mortgage rates to come down, which they did. That would have been some assistance to housing. But we really just saw ongoing consumer uncertainty and pressure in housing that are disproportionately impacting home improvement demand.
So they accurately predicted that rates would come down, but what they didn't expect was that the decrease in interest rates wouldn't really have much of an effect on the housing market or customer demand at places like the Home Depot. And the reason for that? Customer uncertainty. Customers, us, we are not really comfortable in this economy. It feels fragile. The stock market is going gangbusters, but the real economy, real people, are by and large struggling. Inflation is up, groceries are more expensive than ever before, and while home prices have even come down in some places, other expenses like insurance and utilities are going up like crazy. People don't feel comfortable spending in this economy, especially on big stuff like home improvements. And the Home Depot is seeing that reflected directly in their results. There are some people, however, that are spending. These are mostly people on the high end or high income earning people. They're actually doing pretty well right now, partly because they benefit from how well the stock market is doing. There is a name for this. It's called the K-shaped economy. This is the idea that after the downturn caused by COVID, there was a recovery, but that recovery was split into two pieces. There's the top side, which is the high income earners. They're doing better right now than ever before. But on the bottom side, those are the lower income earners, and those people are struggling. Now, both of these groups of people shop at the Home Depot, but those on the bottom are definitely shopping less. They don't feel as comfortable. They're not spending as much on big projects. But those on the top, or rather the contractors and other professionals that they're hiring, are still shopping at the Home Depot. In fact, I'm actually interested in your situation. How do you feel about this economy? Are you starting home improvement projects, or are you waiting until things improve? Leave me a comment and let me know. Also, where do you think the Home Depot is headed? Do you think that they're going to have a good fourth quarter? Or do you think that the downturn for them is going to continue? Leave me a comment and let me know your thoughts. Now, on the call, another analyst asked questions specifically about the K-shaped economy issue. And here's what he said.
There's a lot of talk about a K-shaped economy right now, but we're starting to see more evidence of job losses for white-collar employees. So I guess I'm curious, when you look at your data, is there anything you see that supports more fatigue in your upper income customer base? And I guess as a follow-up, anything regionally that you'd call out in over the past couple of months?
Here is what the Home Depot CEO had to say in response.
Well, I think that regionally, the most acute difference, again, is the storm and weather patterns. On the larger or the higher income cohort, we don't see anything specific. It's not been a lot of trade down, and we've talked in the past. Things like countertops, there's been some trade down, but we have still not seen trade down across the broader assortment in the store. If there's an indication of maybe some fatigue in taking on bigger projects, we have seen pro backlogs in larger backlogs start to diminish a little bit. So our pros are reporting, months that they're booked out. As we know, some time ago, you couldn't find a pro. And then, they all had full books, and we're seeing a little softening in larger project backlog. I can't say we've tied that directly to an income cohort, but we've definitely seen the dynamic.
So the Home Depot is reporting that contractor backlogs are dropping. Like he said a while back, you couldn't find a contractor. Now they're still busy, but their backlog is going down. Now that in and of itself doesn't spell disaster for the economy or for Home Depot, but it could if things change. In fact, there was an interesting recent statistic that showed that the top income earners are accounting for nearly 50% of all US retail spending. In normal times, top income earners do spend a lot, but that number is normally closer to 35%. So what does that mean? Well, lower income earners are already spending less. They're already tightening their belts because everything is more expensive. But the higher income earners, they're carrying the economy. But here's the thing. If something were to happen and higher income earners become skittish and stop spending, if the stock market crashes and they don't feel as wealthy, then you could see huge problems for the economy as a whole and for stores like the Home Depot. The CEO of Home Depot went on to talk more about this issue.
On the one hand, you look at certain economic indicators and you say, geez, things are pretty good. You look at GDP, you look at PCE, those are both strong. But on the other hand, what's impacting us in home improvement is the ongoing pressure in housing and incremental consumer uncertainty. So take housing. Housing's been soft for some time. We all know the higher interest rates and affordability concerns. But what we're seeing now is even less turnover. The housing activity is truly at 40-year lows as a percentage of housing stock. I think we're at 2.9% turnover. And then home prices have started to adjust in even more markets over this past quarter. And then when you look at the consumer, what's going to spark the consumer, we still believe we have one of the healthiest consumer segments in the whole economy. But again, the economic uncertainty continues largely now due to living costs, affordability is a word that's being used a lot, layoffs, increased job concerns, etc.
The Home Depot is seeing the downturn. They're experiencing it, and it's impacting their business. It's not huge yet, and they do expect things to improve in the future. But there is another side to this. Things could get worse. Things could go down even further. And if they do, it's going to get tough for Home Depot. In fact, there are a lot of people who are predicting a downturn. Most people think that there's an AI bubble, and that could lead to huge problems. Also, there's a leading housing analyst that is recently went on a bunch of shows predicting that home prices are going to drop in half. And they're predicting that we're going to see things get even worse now than they were in the 2008 housing crisis. Now, here's the thing about that, though. Extreme predictions like that tend to get a lot of clicks and they get a lot of attention. But I don't find that particular prediction credible. I do think that we're in an AI bubble and it could have an impact on the economy as a whole, certainly, and on housing, maybe, but not in a way that is at all comparable to what happened in 2008. There's a saying that's thrown around economic circles and analyst circles where you point at a guy and say, hey, that guy's predicted 10 of the last 3 recessions. And what does that mean? Well, people are always predicting that the sky's falling. Again, it gets attention and it gets clicks, but the simple fact is that we don't know. There's no way to know. We can only look at the data coming from various sources to really see and understand what's going on, and companies like the Home Depot can help with that. But many times we only know that a recession is happening when we're already in the middle of it. So what is Home Depot seeing? Well, they're seeing a slowdown. Their foot traffic is down. They're seeing pressures on consumers and pressures on housing. They're seeing consumers that are less confident about the economy and are holding back on their spending as a result. They're seeing a large decline in their stock price. But what's going to happen in the future? Well, instead of me making predictions on what I think is going to happen next, I want to hear from you. What do you think is going to happen next? Leave me a comment and let me know. I'd love to hear what you have to say. As always, thanks for watching. If you like the video, be sure to hit the thumbs up and subscribe to my channel, and I'll see you in the next one.